All right. Back in the action once again. Great to be back here with you all on another edition of our nightly newsletter. It's Monday evening. It's June the 17th, 2019. My name is Joseph, by the way, and as always, this, of course, is your nightly newsletter. Now, don't forget, guys, I help traders find high-quality trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. And my job tonight is to identify the best levels, the best setups, the best opportunities we see setting up for tomorrow. That's Tuesday's trading session. And in tonight's video, we're going to cover the calendar here this week. It's a big quadruple witching week ahead of us. Got a lot of news. We'll talk about that here briefly here tonight. Then we'll grab the charts. We'll grab oil, S&P, Nasdaq, gold, and euro in the video tonight. I'm going to jump in on oil first because oil is all coiled up ahead of contract rollover tomorrow. So I want to make sure I'm ready for it. Let's grab that oil market, that Texas tea, that black gold, and let's take a look here at what this chart is telling us so we can put together a plan for tomorrow's trading session. Now, as you can see here right now, we are going into rollover tomorrow. This is the 719 contract. We'll talk more about the rollover plan as we go into this video tonight. But as you can see, though, right now, a nice big bold move into a trading range, right? This is a balanced market. Anytime I see a range-bound market, I know the key word here is balance. Balance means I want to buy low, I want to sell high, and avoid the middle of this trading range. Now, of course, I've got my range. I want to buy low, I want to sell high, I want to avoid that middle, and my favorite setups on days like this are going to be failure patterns. I'm looking for those sellers to fail so I can buy it off the low. I'm looking for those buyers to fail so I can sell it off the high, and I've really got to be disciplined not to go trying to fiddle around in that middle. Today, we'll talk about a couple different setups. I'm watching for one particular setup as we go back into that range, and then because of this bull bias, I'm looking for a slightly different but just as important sell setup to sell off of those highs. And of course, with rollover tomorrow, I'm also watching for a possible breakout in both directions. So we'll talk about how to trade those breakouts. We'll talk about when to fade the breakouts, when to trade the breakouts, and we'll cover all of those details in the video tonight. So make sure you stay tuned if you're an oil trader like we are in our trade room. Over on the S&P here tonight, S&P is very similar, a bullish market into a trading range. Bottom line is, anytime I see a sideways movement, anytime I see a range-bound scenario, I know the key word here is what? It's balance. Balance tells me to buy low. Balance tells me to sell high. And whatever you do, stay out of that middle, right? Now, how do we do this? Well, I'm going to buy low using seller failures. I'm going to sell high using buyer failures. And of course, with this bullish bias, I've got one very specific type of buy setup, one very specific different type of sell setup, and of course we'll also talk about what it means to get a breakout, when we can trust a breakout, because obviously 1, 2, and 3, none of those breakouts were successful on either side of this range right now. So we'll talk about when you can safely trade those breakouts and when you want to fade them and send them back into that range. Over on the Nasdaq, I'm going to sound a bit like a broken record here for a bit. Nasdaq is bullish, as you can see, into a trading range. Now, of course, Nasdaq range bound, balanced, right? I want to be buying off of that low, selling off of that high, and of course, avoiding that middle. Now, as you can tell, this NASDAQ looks a whole lot more likely to make a run higher here, right, as the other markets do. I've got some targets waiting overhead for where I think these buyers want to go tomorrow, but when can I buy it up here? At what point, right? At what point is it safe to be a buyer as we go higher? I'm going to give you two specific breakout setups I'm watching for, and obviously we'll talk about what to look for a reversal on this chart as well. Got a lot to talk about there on the NASDAQ, so make sure you stay tuned on that as we dig into tonight's video. Over on the gold and euro are batting down the hatches ahead of the FOMC announcement later on this week. Big bear move down into a trading range. And of course, this is kind of like the opposite we're seeing right now on the Eminis and the oil. The bear market now into that range tells me I want to sell high. I definitely want to buy low. I want to stay away from that middle because we have that bear bias. I have to be very careful here. I can sell relatively aggressive. I've got to be a little bit more patient, though, being a buyer off of that low. And I got to be honest with you, I really think we've got great shots on both sides of this market. Buying low, selling high, and even if we might just get a pendulum swing into a complete blowout with a short covering rally here tomorrow. I'm going to talk about that in a lot more detail here tonight on that yellow metal, so make sure you stay tuned on that. And then how about that euro? Big move down last week. We did have rollover on the euro, and of course it runs into a very, very big clue anytime we see a double bottom on the chart. That always tips me off to a possible trading range. Market goes up, tries coming back down. We know we're bearish. We know we're in a sideways range here right now. I want to sell high. I want to buy low. I want to stay away from that middle. And I'll tell you, there are a couple really nice areas here where I'm going to look for one specific setup off the high, and of course trying to buy off of that low. I'm going to keep my eyes on that big round number, use that as a magnet. And of course, we'll also talk about how we can qualify a breakout back into prior ranges or possibly a breakdown. When is it safe to trade it? When do you want to fade it? What does a breakout look like? We're going to dig into all of these, all these setups here for the euro tonight. We got the euro, the gold, the Nasdaq, the S&P, and of course the crude oil. We're going to break all of this down into small bite-sized pieces. But before we jump in and put the plan together here for tomorrow, I want to make sure you never miss another great video. And to make sure you're always getting that, or to make sure you always know when the next video goes live, I'm going to send you an email every evening as part of our mailing list. Right before I publish our video on our YouTube channel, I send out an email to everybody on our mailing list, and I want to make sure you are on that list as well. To make sure you never miss another great video, all I need is your name and your email address. Hit that subscribe now button, and then don't forget, your job isn't over at that point. You need to go in and verify your email. And remember, sometimes those verification emails, they get stuck in your spam filter. So if you don't see it in your inbox, check your spam, check your junk, check your promotions folder in Gmail, because you've got to go in there and verify that email account. I'm going to send you a welcome email with a bunch of goodies so you and I can get the most out of our time together on this nightly newsletter. And then real quick here, guys, I need your help. I love getting feedback from you all. I always appreciate you giving me your feedback. So what do you love? What do you hate? What would you change about this newsletter if you were in charge over here at School of Trade headquarters here in Los Angeles? I want to make this video newsletter the best it can possibly be. What are your favorite markets? Which markets do you wish I would add? Do you want me to remove any of these, Is there anything that would really make this a better resource for you? I would love to hear that feedback. So post me a comment in the comment section below. It means the world to me that you guys will take a few minutes out of your time to drop me some feedback in the comment section. And while you're down there, don't forget, if you watch this video every evening, if this video helps you the following day, give me a thumbs up on the YouTube video here tonight. And when you do, make sure you subscribe to our YouTube channel. That way you get all the good stuff right into your inbox. And speaking of inbox, don't forget, you can always call me or use that live support tool in the upper right hand corner. I realize that most websites don't like it when their clients call, but I love talking to you guys. So don't be afraid to pick up the phone, call that toll-free phone number, use that live support tool. If there's any questions about becoming a client, maybe a free pass to our trade room, or getting registered on our free trading classes, call that toll-free phone number, especially if you have questions about the best brokers, charts, data, and all that stuff that is, there's all kinds of misinformation on the internet these days, and I'd much rather give you the correct information straight from the horse's mouth. So use that toll-free phone number, use that live support tool in the upper right-hand corner, and I'm really excited to talk to you here in the office and answer all your questions. But for now, though, let's get to work It's great to be here with you. I hope all the dads out there had a great Father's Day. I'm not going to lie, I had a pretty epic Father's Day weekend. Had a lot of family and friends in town, and boy, oh boy, it was a great time. Like I mentioned last week, right? Those are the times that you really never get back. And so really hope you guys were able to spend some time with dad, maybe grandpa, maybe an uncle or a nephew. Hope that you guys had a great weekend and really rested up and refocused here for a quadruple witching week here ahead of us. We get a big week ahead of us here. Lots of news coming in. Now, if you recall, last week we talked about how we were dealing with the second week of the month, right? Remember last week? Last week was kind of that floundering week, right? That second week of the month, there wasn't any major news. And I warned you last week that once we get into the third week, usually this is where volatility starts to kick back in. And that's exactly what we're expecting here as we go into tomorrow, Wednesday, Thursday, and Friday. First of all, here's why. Friday, of course, well, let's back it up. Tomorrow, the FOMC meeting begins. This happens 8 times a year. It's a 2-day meeting, and it pretty much culminates with the FOMC announcement on Wednesday. Now, the reason why I'm mentioning this, tomorrow's not going to be that big of an impact on this. However, it is quite obvious that markets are clearly looking over their shoulder right now in anticipation of that meeting announcement. They've got the odds at about 35% of a rate hike on Wednesday, and you can definitely tell these markets are a little bit skittish, which I'm definitely anticipating will lead to some, I don't want to say unexpected volatility, but don't be surprised if these markets the next 24 hours kind of keep us on our toes with that FOMC announcement right around the corner, right? And again, with that, 35% odds right now of a rate hike. Most people have priced in a rate hike at some point this year, and I think people are really cautious here today into tomorrow ahead of that Wednesday report. So don't be surprised if these markets do get a little bit jumpy. Again, like I said, volatility is expected to increase a few ticks higher and lower, right, because of this third week of the month, and the FOMC announcement is definitely a big reason for it. Now, as we go later in the week, we also know that Friday is what's called Quadruple Witching. So what's going to happen is we've got 4 different asset classes all expiring at the same time. This happens the third Friday of every 3 months. And of course, it's the 03 month, right, March. It's the 06 month, June, right? It's the 09 month, that's September. And of course, the 12 month, that would be December. This is usually a very active quadruple witching. So again, it reinforces the idea that expect to see some volatility here this week as traders are anticipating balancing their portfolios ahead of that quad witching on Friday. Now, I'll talk more about our plan and kind of what to expect as we go into Thursday and Friday session, because it's really going to be a tale of 2 events here this week. One is going to be the lead up into the FOMC announcement on Wednesday, and then from there, it'll be the lead up into the quadruple witching on Friday afternoon. So we definitely have some big headlines we're watching here right now. So that's the big picture here this week. Tomorrow is June 18th. The 18th is usually when crude oil will roll over. I am watching oil here as we speak right now, and you'll notice that oil is neck and neck right now with those 2 front month contracts. We're currently trading on the 719 because that has the most amount of volume, but don't be surprised if tomorrow morning, by the time we get to our desks for the U.S. morning session, don't be surprised if that 819 contract has now claimed the top spot, and of course traders will want to roll forward, right? So how do you know when it's time to trade the 819 contract on oil? It'll be once the volume is higher than the 719. As you can see here, volume is not as high right now on that 819. So tomorrow is the 18th. We are expecting expecting to see rollover probably tomorrow, if not tomorrow, the following day. I hope it's tomorrow morning. And of course, we'll keep our eyes on that volume. Then, last but not least, what do we actually have scheduled for tomorrow? We've got the housing starts number at 8:30 Eastern time. Now, we also have the home price index out of China in the overnight session. So this is really a day tomorrow filled with kind of housing numbers, right? The home price index will come out of China, usually about 2 o'clock Eastern time, right? When those numbers come out of China, they're always going to keep us on our toes as far as what time those reports will come out. Surprise, surprise, it's China. But of course, we are expecting to see some housing numbers out of China overnight. But in the U.S. session tomorrow, it's really all eyes on those housing starts. Housing starts are a huge leading indicator for the economic health, right, of our economy, at least here in the U.S. And of course, that is kind of the leading domino that will triple the rest of the stuff here as we go into this week. So I anticipate that'd be a pretty big market moving event tomorrow morning. So we'll definitely be on our radar tomorrow at 8:30. We open up our trade room every morning at 8 o'clock Eastern time. So of course, we'll be right there with a front row seat. So tomorrow, housing starts, oil rollover tomorrow, right? Those are the two big events we're expecting here for tomorrow. On Wednesday, we got the FOMC meeting announcement. We'll talk more about that tomorrow night on the newsletter. And then, of course, from there, it's quad witching on Friday. And, of course, in addition to all of this stuff that we know about, right, there's always those known unknowns, right? We keep hearing about, trade negotiations. We keep hearing about the violence, maybe not the violence, but the negotiation of the Iranian oil stuff, right, happening in the Middle East right now. So there is definitely a lot of other factors that are kind of flowing under the surface right now. Main ones being the oil sanctions of Iran and that affecting the oil prices right now. And of course, trade, and more trade, right, between the U.S. and Mexico, the U.S. in Europe, right, the U.S. and obviously and China, all these trade negotiations going on right now. So those are all things that we're all listening in on right now to see if we do have them impact us tomorrow. So as always, guys, a lot going on here this week, especially this third week of the 6 months of the year, right? The quad witching week here. Got a lot to cover here, got a lot to keep our eyes on. And that's exactly why I always invite my clients to come out and execute the strategy with us every morning in our trade room, because what you'll soon find out is the strategy is very easy. What is not always so easy is actually executing that strategy when we get news coming out or when the market's slow ahead of some news. Sometimes the markets move very fast and you've got to react confidently. Sometimes the markets are very slow and you have to be disciplined. And that's why our trade room is a great place every morning, Monday through Friday at 8 o'clock Eastern time. So let's get ready here now. Let's open up some charts here. I'm going to go oil, S&P, Nasdaq, gold, and euro on the docket here tonight. Start off here with oil. Again, as I mentioned earlier, this is the 719 contract on oil. You can see that in the upper left-hand corner here. The 0719 is the current front month, and of course tomorrow we're watching volume into the 0819 contract. As soon as that 819 contract has more volume, total volume, than that 719, we will switch over to that 819 contract. And if you don't see it tomorrow, it's not the end of the world, right? We're not talking about contract expiration, right? They're not going to go ship a barrel of crude oil to your front doorstep at this point, right? That will happen, though, if you don't exit positions by contract expiration. That's end of the month, though. We're talking about rollover, and that's based on volume. So you really can't mess it up too badly. And again, tomorrow morning, I'll make sure to guide all of our clients the right direction, right, in our trade room. Now, what else do we know here? We know we have a bull market, and we know we have it into a trading range. Let's talk about this for a moment here, because whenever I have a range-bound market, I always know I want to buy low, I want to sell high, I want to avoid the middle. And this is always one of the hardest parts. I want to avoid the middle. And then what's the overall plan? The plan is to focus on failures, right? Focus on failures. Focus on failures. That's going to be the key kind of strategy when it comes to a range-bound market. Now, when we talk about focusing on failures, a lot of emphasis is placed on the momentum in the market before the range. For example, this was a bullish momentum into that trading range. And what I want to do is I want to kind of break this down here for you. So let's imagine for a moment this is our trading range and we have a bullish move into that range. When I have a bull move, I want to buy low and sell high while avoiding that middle. Now, to be a buyer below the low of a range that is bullish, I can be relatively aggressive. And what I'm going to do is I'm going to look for the sellers to try to run the price lower. I'm going to look for them to try to sell a pullback. We call this the 2-try rule, by the way. 1 try for the bears, 2 try for the bears. And then once I see those bears run it lower, once I see them try to sell that pullback, now I know where their stop losses are. I know that anytime I see a market that's range bound, the key word is balance, and the market will almost always come right back up into that trading range. So we look for failure patterns. That would be seller failure patterns down below the low of that trading range. Now that's a bull bias. I can be relatively aggressive being a buyer at the low. But what if I want to be a seller off the high? How exactly does that work? Can I apply the same thing? No, you really can't, because what happens a lot of times is when you see a market run higher, if you try to do the same pattern, right, let the buyers try to buy the pullback, right? If you try to apply the same pattern here and try to sell into the stop losses of those buyers, a lot of times what happens is buyers are actually waiting down here and they'll buy it right where you're getting in, and you'll feel foolish because you're selling a bull market. So what I do is I always wait for what I call a nested failure. So let's just say, for example, we make a run higher here and I want to sell back in. What I'll now look for is I'll let the buyers now try twice. Make them try once, make them try twice, and then I can look for it. Do you see the simple but very important difference there, right? As the market goes lower, I can buy right into those seller failures because it's a bull market, right? It's a bull market. If we go higher here, right? If we go higher though, we're already bullish. So I have to anticipate buyers are going to be a little bit more courageous, right, buying these pullbacks. I want to give them a couple swings, let them try once, let them try twice, and then I can sell it back down, okay? That's the key when we have a bull market. Now, what about a breakout, right? What can I do in a range-bound scenario? What would a breakout look like? There are 2 basic breakout patterns that I'm going to look for here on this particular range. One of them is what I call a 2-try breakout, which means it's a very strong move up. That's the key. Very strong move. This could be in either direction, by the way. And then once I see that strong move, now wait for the sellers to try a couple times to send it into the range. What I look for is I'm looking for them to try once, higher high, try twice. Once I have those bears trying once and trying twice, now I know I've got momentum running hot. I've got stops now waiting, and I'm buying right through those stops, right those stops. Again, relatively aggressive, but momentum is strong here. Once you see him try once and try twice to send it back into that range, now we know where the pain starts, right? As we always say, look for that pain point and buy right into that pain point, because that's the only way that you're going to be able to do that confidently and successfully. What's the other one, right? That's called a 2-try breakout. What's the other one? The other one is going to be if I have a range here again, and again, this would be in either direction here, by the way. If I have a range now, it's called a 1, 2, 3 breakout. It's a strong move up, not as strong as the previous pattern, or else the same pattern. Strong move up, pull back, and run. Once I see this now, 1, 2, and 3. Once I see that strong move up, that pull back, and that jump, now what I can do is I can mark up that high, mark up that high, bring it down to that low down there, find that low, and now there's my sweet spot right there, and I'm looking to buy that pullback. It'll be the low of a hidden channel, right? Kind of a hidden channel there. Okay, so now we know the basic idea here of the patterns that we're looking for. We know we have a bull market right now into that trading range. I've got a strong move down here for those bears. I would imagine those sellers are going to try to sell off that moving average. And when they do, we know exactly where their stops are, and we can buy right into those stop losses. At the same time here, if the market runs higher, again, we're not a bear market, so I have to look for that nested failure, right? Let them try once, let them try twice, and then sell it back down again. You can see a good example back here of what a nested looks like. It goes up, the buyers try once, the buyers try twice, and then everyone piles on, right, to be a seller on it. We go up, the buyers try once, the buyers try twice, everyone piles on right from there. So we know the basic idea here, right? We make a move lower. I'm looking for those sellers to try off the moving average. We know where their stops are. We can buy into those stops. And if we get lucky, we'll get it low enough to the point where I can also double dip that pattern into what we call a pullback pattern. It'd be a failure pattern right into a pullback. Just remember though, stay out of the middle of that range, right? That's the tricky part when it comes to ranges. Then if we do make that run up, right, it's the same patterns back here, right? Make them try once, make them try twice, then I can sell back down from there. And again, right, you don't want to take the pattern right here, right? That's not where you want it. I don't want the trade there. I want it up here, right? I want to see it run up. Let them try once, let them try twice, and then back down from there. And then, like I mentioned earlier, right, how would we trade a breakout? What would a breakout look like? A breakout, I have no problem with breakouts. I just have to make sure they qualify. So, for example, we have a strong move down. If we can hold this pullback right now and make a nice run going lower here, that's a very strong breakout there for me. We'll mark up that low. We'll mark up that low, up around that high, and now we know where that sweet spot is, right? And we're selling off the high of that channel. Obviously, these channels are not drawn to scale here, right? So don't get too wrapped up in the specific location of this. It's really all about the strength of that move coming off the moving average. Because remember, we get a strong move down. Do not try to get too greedy here and sell that move. I know it's very tempting, but look what happened last time, right? To sell that move, it's going to come right back up and stop you out. So what you want to do is you want to make sure they get that strong move down. Once they see proof of that move lower, remember, it's balance. Got to prove to me you're worth that breakout. We'll grab that high and sell off that high. And of course, our target at that point is back down to retest that low. So sellers are trying to get back down to retest that low. As far as a bull breakout goes, you can see the bulls have tried unsuccessfully here a couple times. If we do get a run back up, let's just say, for example, we're back in that range, right? Let's just say, for example, here we end up back inside that range here. Stay out of the middle, right? Strong move up, big strong move up. Bears try once, bears try twice. Higher high, right? That's the key. One try, two try, then we know where stops are and we're buying right into those stops. Or we go back into the range. We get a 1, 2, 3, right? Again, make sure you see proof of that 1, 2, 3 before you go trying to buy that breakout. Mark up that level, mark up that trend line down to that low. Now we know where our sweet spot is and we're looking to buy the pullback right to that hidden channel. So boy, we've covered a lot here so far. And again, don't forget tomorrow, most likely rollover. The chart will look almost identical, but the prices will probably be a little bit different. Just be aware of that, right? And again, I'll be in the trade room tomorrow morning, 8 o'clock Eastern time, and I'll walk you through every step of the process. So far, we've talked about failures. We've talked about nested failures. We've talked about 1, 2, 3 breakouts. We've talked about 2-try breakouts, right? Buy low, sell high, avoid the middle. I have so much more I want to share with you, but I don't have a lot of time to do it. So here's what I want to do. I want to give you access to a free trading course in the upper right-hand corner. I'll also put a big red button here right now. I'll also put a big red button right below the video tonight on our trading blog. If you want a deeper dive into all my favorite patterns, if you want to learn more about our 3-step strategy, even better, if you want access to hundreds of chart lessons of how we apply this stuff every day in our trade room. Grab that free trading class. I'll put a link in the upper right-hand corner. I'll put a big red button right below us here on the video. I have so much more I want to share, but we're going to keep moving though. So grab that free course. I'll see you inside the members section at schooloftrade.com. Oh, and remember, when you register for that free class, sometimes those emails get stuck in your spam filter. So make sure you check your spam filter because it might be sitting there if you don't see the email for the first lesson in that free trading class. Next up, let's grab the S&P right now. S&P is very similar here. Very bullish, obviously, right? Into a trading range. You could call this a triangle, trend line down, trend line up, right? You can call this a triangle if you want to. Call it a rectangle. I've got it marked up here as a rectangle. Now, don't forget, what we're going to do is we're going to use the size of that rectangle to create our sell zones overhead and the buy zones below. You'll learn a whole lot more about this stuff inside of our trading classes here at School of Trade. But for right now, though, just remember the size of that range ultimately determines where my buy zone is, where my sell zone, and obviously where my no trade zone is going to be as well. So at this point in the game, right, look where we are. We're right back in the middle of that trading range. A horrible place to be trying to trade here right now. We know the market is overall bullish. We know that this range is the balance area. I want to buy low. I want to sell high. And because we know we are bullish, we know there's a very, very simple but very important piece of this puzzle. And that is, as we try to go lower, what do we look for? As we try to go lower, I'm looking for the sellers to try to sell off the moving average. Again, we call this the 2-try rule, right? 1, 2. See a good example back here, right? We go lower. The bears are to sell off the moving average. What happens? They fail and the market runs back up. Okay, same idea over here now, right? Same idea over here. I look for that move lower. I look for the moving average now coming over. I look for those bears, right? I look for those bears. The bears come in. They try to sell off it. I know where their stops are. I can buy into those stops, right? I can also buy the pullback, right? This little combination setup of a failure pattern, right, into a pullback pattern. And you can see almost identical that situation setting up over here, right? That's almost identical to what we're looking for right here tomorrow. Just remember though, right, you want to stay out of the middle, right? So sometimes those pullback patterns, right? Sometimes they get you in the middle and you don't want to take those, right? A good rule of thumb on a range-bound balanced environment is to make sure you're buying underneath the range low, selling above, right, the high of the range as well. Speaking of the high of the range, right, if we try going higher here, what's the plan? The plan is make them try what? Make them try twice. Once, twice, and then back down in, right? Why do we make them try twice up there? Because we're bullish, right? Because we're bullish. Once we see these buyers buying the shallow pullback, buying the deeper pullback, now we know the rookie buyers, right? The people who are chasing it, they're already in. And we also know the more conservative buyers, the more experienced buyers, right? They're waiting now as well. Once they're both in, then we can sell this puppy back down into that trading range. And again, stay away from the middle of that range. What's a breakout look like? Two types of breakouts, right? First one, strong move up, real strong, right? Real strong, real strong. Once we see that big strong move up, now we know bears try once. Higher high, right? That's the key. Higher high. Remember, sellers want to sell high. They don't want to sell lower, so we can't count it unless it's a higher high. Once we see those second tries there, now we get the bears trying once, got the bears trying twice. Sellers want to sell high, right? That's kind of the trick. That's the way that I always remember it, right? We look for those 2-try breakouts. Now we know where stops are. And again, the goal of this is you're literally buying right into those stop losses of those sellers, because at this point, they're not going to give it that much room to go against them, right? If you're a seller and you're trying to sell back in, and you get a nice signal to sell short, I mean, how much room are you really going to let it go against you? You're probably not going to let it go that far against you before you pull the plug and get out and join the buyers there. And that's exactly why I wait for them to try once, try twice. At that point, there's a big old bullseye right above those highs, and buyers just love to buy right into those stop losses of those foolish, right, counter trend sellers. So if we do see it running hard here, right, 1, 2 breakout there, or, right, I have no problem also 1, 2, 3. That also works too, right? Use that trend line. The key is, again, you got to see some explosiveness coming off the moving average, right? It's not enough to just get a strong move up, because look what happened back here, right? That was a real strong move. Look what happened. It fails right back down. And again, you can't just rely on a strong move higher and say, well, it's a breakout, right? Or what a lot of rookie traders will do is they'll try to use some sort of MACD indicator, right? And look for divergence, right? You know what I mean, right? Higher high, lower high. Divergence just isn't reliable enough to predict or anticipate a reliable breakout. Once I see, and believe me, I wish this wasn't the case, but when a market is balanced like this, there's a reason why it's balanced, right? Buyers and sellers agree on value right there. And so I can't just try to buy that breakout and cross my fingers, close my eyes, right? Hop on one foot, rub my lucky rabbit's foot, right? And hope for the best. I have to wait for that run going right back up to it. Then mark up that high, and again, down to that low, right? You're off that big low. That's going to give you now that hidden channel. And I'll tell you, this is a pattern. This is a setup that's worth waiting for. It will take some time, because obviously you've got to get that breakout, then wait for the pullback. But I think most of us already know that there's no trophy for the first person to trade every day, right? So stay patient. A lot of the best setups we're seeing right now are happening after the opening bell at 9:30. So don't be afraid to stay patient for that time slot that I love on the S&P, which is that 10 o'clock to 10:30 time slot. We always seem to find some great setups there over on the Emini. Where do these buyers want to go, by the way? There's a big measured move waiting all the way up there at 19.5. We had that big move up in the last week. That's the measured move up there, up at that 29.15, 29.15 half area there. That's what we're trying to get to, right? So if these buyers can make this happen, that's where their target is. If the sellers get the breakout, right? And again, I have no problem being a seller here as long as it confirms that breakout. Once we do get the 1, 2, 3 breakout, mark up that low, mark up that high, and of course now we're selling short from there. Where's our target from there? Target's all the way back down to that low, right? What was that, Thursday the 13th, right? Last Thursday, right, with that big move up and then that trading range. So we definitely know there's potential for this move lower, but it really does look like, though, it does look like between this range here and this range here, it looks to me like the best stuff's going to be buying those lows down here and buying it with those seller failure patterns. And again, as I mentioned earlier, I'm just simply drawing some scenarios I'm looking for here tomorrow, so I'm ready for tomorrow. If you want to see hundreds of real examples off real charts, right, of all these setups, grab that free trading class in the upper right-hand corner, or that big red button below the video tonight on the blog, and you're going to love all the detailed analysis you'll learn as part of that free trading class. In the meantime, let's keep going about some Nasdaq right now. Nasdaq is kind of like the little brother of the S&P right now. You'll notice here, Nasdaq also has a strong move higher into what is really a very small trading range. Nasdaq also had rollover today. You'll notice these are all the 919 contract, right? The E-mini, the euro, right? They all rolled over or rolled forward, right, to that 919 contract. We talked about this last week, obviously, right, on the newsletter last week. So you guys were prepped on that last week. I'll tell you right now, this could really get interesting here for that Nasdaq, right? It's a bull market. It's into a trading range. You can see that buyers are waiting here to buy low, but there's one very big sign right now, one very big clue on this Nasdaq, and that is these buyers are not giving us any real deep pullbacks, right? Remember, the size of that range, that tells me where that buy zone is down here. It also tells me now where that sell zone is overhead. At the same time, Got a beautiful reversal line here at this, what is that, 75.38 and change, right? That's a gorgeous level of support, and nobody's using it, right? Nobody's using it. Got all that support waiting down there, and the buyers have really held strong on this. This leads me to believe this may not even be a range. It may be a flag, right? Strong move up into that falling resistance. You can kind of see how, right? Kind of see how it's rolling through that channel here right now. So I would say at this point on the Nasdaq, the lack of pullback, the lack of, right? The lack of really any patience on behalf of these buyers is a huge clue, and it definitely gives me reason to think we may be in store here for a breakout going higher. Now, until I actually see proof of that breakout, I don't want to say I'm going to buy the breakout here because it is way too early to qualify this as a breakout. We do know, though, the amount of the move before the range, after the range, that's where they're trying to go, right? Those buyers are trying to get up to that 76, right, 17 and change up there. That's where they want to get to, but to get there, obviously, we're going to need to see that either 2-try breakout or 1-2-3 breakout setup. So pretty simple, right? We got our range. I want to see the market roll over, go lower. I would love to see it pull back, right? Get that moving average coming over. Get those bears, right? Get those bears to try to sell into it. Now we know where stops are. We can buy into those stops. We can buy the pullback that follows. These are one of my favorite two combination setups. It's a failure pattern into a pullback pattern, buying off of that low. And of course, right, as we go higher here, because we are so bullish on this, don't forget, you can't sell high unless we see him try once, try twice, and then we get that short from there. And again, I'm drawing it up right now, but make sure you don't trade it inside that range, right? Which almost one is that big move up, that 1, that 2, and then down from there, right? Down from there after that 1-try, 2-try. As far as a breakout goes, right? It's a 1, 2, 3 breakout, mark up that high, down to that low, right? Go up that low, and that's where our sweet spot is, right? That's our sweet spot, buying off of that low. And if you're curious, what is usually going to be the pattern that we see there? Think of it this way. If we do make a run up 1, 2, 3, I mark up that high, mark up that high, mark up that low. That creates that creates my hidden channel, my sweet spot, that area, right? So imagine now we zoom in on that area now. What usually happens is the market will pull back. It'll be just below the moving average. The sellers will try to sell off that moving average there, and you know how that ends, right? Those sellers will probably fail and give us that failure into a pullback and then up from there. So kind of imagine now, right, that setup situation, right, that combination, it's that classic failure pattern, right, into pullback and then up from there, right? So imagine that now as it goes higher. Or strong move up, right? Real strong move up. Let those bears now, let them try once, let them try twice. Again, make sure you've got that 1 and 2 at a higher price. That way sellers are fully committed, and at that point now we know where stops are, and we can look for those buying opportunities right into that stop. Now, one thing you want to be careful of is if it runs really hard, right, and really gets uncomfortably close to that measured move. In those situations, the best thing to look for now is a trap at the low. 1 try, 2 try, and a trap low. Remember, the most important thing is to make sure you buy low when you're running out of space. I know where that measured move is. I know that's likely where the buyers are trying to go. So if we do see a strong run in the pre-market or the overnight market in Asia, just be aware if we run too close to that measured move, you want to adjust your strategy a little bit, right? If I see it go up like this, 1 and 2, I don't need a trap low on that, right? I've got so much open space overhead, I can still take a small risk with a big reward. But if this thing continues to go higher here, and then I find myself way up here, it's a Nasdaq. It could easily happen. Look for that 1, look for that 2, but now you almost need to see that trap low. That way you're not buying right into that level of resistance. And one of the things we always talk about on this newsletter is that anytime I find myself in a situation where I'm potentially buying into a target, buying into a level of resistance, I always know the best setup for that is going to be a trap setup, right? Buying just below that prior swing low. And again, the same thing will apply to the downside, right? We go 1, 2, 3, mark up that low. And again, if it just runs, we can't just sell it, right? We got to wait for that failure and then up in from there. So again, I know I sound a bit like a broken record, but most of these markets are setting up very similar. Oil, S&P, and of course the Nasdaq. Now going forward from there though, right, over to the gold now, the yellow metal. The yellow metal is very similar to what we've seen so far, but obviously now in the opposite direction, right? Here we have a bear market right now into that trading range, right? Bear market into a range-bound market. Now, one thing we always look for whenever we have a range-bound market is the amount of the move below. You'll notice I've marked it up here. The amount of the move below the range is now the amount of the move above the range. Okay, now hold that thought, because as you can see, I can also see a very strong move going higher. Anytime we see a strong bullish move, or really anything at all, really, anytime we see a strong move in any direction, we always expect to see another leg higher. So I would expect these buyers are going to try, at the very least try, to make a run back up into that measured move, and of course back up right into that pendulum swing area, right? So we call these the amount of the move below is the amount of the move above. And again, my nickname for that is the pendulum swing, right? The amount of the move above is the amount of the move below, right? And vice versa. Imagine this balance, right? Remember, a range-bound market is what? It's balanced. When a market's balanced like that, as it rolls lower, it'll usually roll higher with that same distance. So we have a great vision here now of where I have a level of resistance here. My only problem right now is that we're sitting right in that middle, guys. That's the hardest part about this gold right now. So we know we're bearish, which means as we go higher, I can look for a buyer failure pattern, right? Moving average comes over. Buyers now try to buy the pullback. We know where their stops are. I can sell into those stops, wait for that moving average to come over, sell the pullback from there. Just remember, stay away from the middle, right? Stay out of the range. What you always want to remember is whatever setups we're using tomorrow, right, we want to make sure we're selling them, or buying them for that matter, outside of that trading range, right? Sometimes you get a pattern like this one, right? Back here, right? We go up. Clearly a failure there. That's a failure pattern, but a horrible place to take that pattern. I wouldn't recommend that one. But if we go up, right, get outside this range, moving average comes over now. Buyers come in, try to buy the pullback. Now we've got plenty of space here right now. And usually when that happens, it'll be a strong shock lower, moving average comes over, and we can sell that pullback from there, right? Sell that pullback right from there. Failure pattern, right? Failure pattern into pullback pattern and back into that range. What if we go lower here? If we go lower, it's a bear market. So for me to want to buy this, what do I need? Give the sellers 2 tries, right? Let them try once, let them try twice, and then up from there. Remember, sellers want to sell high, right? So make sure the first try and the second try, what I always say in my trade room is, make sure the second attempt is clearly higher than that first attempt, and make sure there's clearly 2 tries, 1 and 2, right? Sometimes what happens is the market will run lower like this, and you'll see it do this, right? It'll go like that, like right on top of each other. And that's usually just, it's the problem is if it's, you know what I mean? If it's right on top of them, you know, if those 1, 2 are right on top of each other, not a lot of people are going to see that. And since trading is all about putting yourself in the shoes of everybody else, right? That self-fulfilling prophecy, you want to make sure the first try and the second try are pretty darn obvious, right? That way, you know the sellers tried once, you know they tried twice. You know, I call it separation, right? We like to see some good separation between those two tries. Just don't get too wrapped up in trying to trade them on top of each other, because oftentimes that will result in another, right, attempt for those bears, because not enough people will see it as the first two tries. Okay, so now we know, right? We're bearish, we want to go up, 1, 2, and back down. We're bearish, we go down, 1 try, clear separation, 2 tries, and buying back up. We're staying away from that middle. What's a breakout look like? Oh, you guys are experts in this by now, right? 1, 2, 3, breakout higher, mark up the high, mark up that high. You got it. You got it. There's your sweet spot, right? And down from there, right? Or as a bear market, strong move down, bulls try once, bulls try twice. Remember, buyers want to buy low, so make sure that they have the lower lows, right? Sellers want to sell high, buyers want to buy low. Make sure those buyers try once, make sure they try twice. That tells you now where those stops are, right? And we're selling down from there. Target now for the buyers is back up to retest that high. Target for the sellers, boy, big move down. You'll notice the target for the bears down to that 1323 area. So 1, 2, 3, down to that 1323, 1, 2, 3, up to that 62, right? 0.2. And again, I know it's not fun sometimes. I know these ranges can really be frustrating when we're sitting right in the middle. It's easy to lose money with range-bound markets trying to trade breakouts. Just remember, what's the word? What is the personality trait of a range-bound market? Balanced. We have to see proof we're leaving that balance area before we can confidently trade those breakouts. Speaking of which, right, how about the euro? Wrapping up here tonight on that mighty euro. Euro's very similar here to gold. Strong move down into a trading range. Now you might be thinking right now, well, wait a second. How did you know there was a trading range? Anytime I see a double bottom in a bear market, same thing is true for a bull market, right? If I see a strong move up, a pullback, and a double top, right? I mark that high, I mark that low, and that becomes my range. The size of the range tells me where to be a buyer. Right? So same thing here. Strong move down, double bottom, and you notice too, it's not even a true double bottom. It doesn't need to be a true double bottom. It just needs to confirm for us that what was a bear market now for whatever reason is now going sideways. At that point, it's up to the buyers to take this thing and hold it and run it back up. If they don't, what's going to happen? We'll go up, the buyers will try, and they'll fail back down in. That's a pretty simple, right? Pretty simple, I think, to grasp that, right? So strong move down into a sideways movement. We know the market runs up. The buyers, of course, now are on the wrong side of this market. They try to buy the pullback. Sellers are waiting there to sell right into those stops. Now, we're right back in the middle. So what are some options here? Well, one option is we keep going lower. Remember, the amount of the move above the range is the amount of the move below the range. Remember that, right? We call that what? A pendulum swing. Remember, we're balanced right in the middle. We go up, we go down. So I'm anticipating they'll try to make a run for it going lower. Now, how do we buy low in a bear market? We look for that what? That 1, that 2, and I'm obviously drawing these. I'm drawing these a little bit more pronounced. But, you know, good example back here, right? They try once, they try twice. They're clearly separate. You're not, right? You're not trying to call this 1, 2, right? That's not 1, that's not 2, right? That's what I mean by on top of each other, right? You want to see it clearly try once, clearly try twice, even get their trap low on that for the buy going back up. Same thing, going down, 1 try. 2 try. Remember, sellers want to sell high, right? Make them try once, make them try twice, higher price, right? Higher highs there, right? Higher highs there when you're looking for that pattern 1 and 2, and then back up. Same thing we're looking for there tomorrow, right? Stay out of that middle. How do I sell this thing though? Right? How do I sell this? I can look for that same failure pattern, right? Up, buyer failure, into that seller pullback, right? And then back down from there, right? So again, buyer failure, into that seller pullback. Pretty easy idea, right? You can see an example right here. We go up, the buyers try to buy it, they fail. What happens? It runs lower, pull back there, right? Similar pattern there. As we go up, buyer failure, pull back and go. You can look left to see a good example of that on this euro. Now, what about a breakout? Breakout, strong move up, pull back and go. Absolutely. Mark up that high, mark up that high, mark up that low. There's your sweet spot right there. Where's my target for the buyers? My target for the buyers at this point is really back up into that trading range. And then from there, if they can go through that range, I would imagine it's that next big round number at 14,000, which is just overhead there, right? The euro is a currency, and of course currencies, at least at this stage in the game, they love these big round numbers, right? Here we are at 13,000, right? If we do see that 1, 2, 3, I would assume they're going to make a pit stop inside that trading range, right? And then from there, if they keep going, you know where they're trying to go, back up to that 14,000. As far as the sell side goes though, right? This euro really has a lot of space to go here before it gets down to any really any bottom down there at all. So as you can see here on this euro, if these bears, if they can get their act together here, if they can get their act together here, this could really move below that, right? Below that range pretty easily here. Just got to get the 1, 2, 3 breakdown, mark up that low, up off that high, right? And then you're selling off of that high from there. Target, of course, right around that 12,200 level, right, as I just mentioned before. So buy low, sell high. Remember to fade those breakouts until you see the 2-try breakout or that 1, 2, 3 breakout pattern. We're all locked and loaded here for tomorrow. Tomorrow morning, 8 o'clock Eastern time. We're going to open up bright and early. Don't forget, guys, we're watching that rollover on crude oil tomorrow. Don't worry too much about the FOMC announcement tomorrow, but don't be surprised if we do see some markets that keep us on our toes tomorrow because of this quad witching week combined with the FOMC on Wednesday. 8 o'clock Eastern time, we open up our trade room. We're going to execute the entire plan together with all of our clients, and I would love to see you there, right there with me. To get registered, to get started as a brand new client, and to join me tomorrow morning in our trade room, grab the advanced course. The advanced course includes our beginner, intermediate, and all the advanced classroom sessions, unlimited time in our trade room, ongoing tech support. I'll even remotely connect to your computer and help you set the whole thing up. You can register right below the video tonight on our website here at School of Trade. I'll put all the links in the description of the YouTube video. And of course, don't forget, if you're not ready yet to become a member, if you're not there yet, not to worry. We have the best free trial in the business. Right to my left here tonight, there's that big red button that says free trial. As part of that free trial, you get a free pass to our trade room, access to our free trading classes, and as always, hundreds of examples and chart lessons directly from our trade room, right? Grab that free trial, and I'll see you inside the member section of the website. And if you have any problems, don't forget, when you register for your free classes, I'm going to send you an email. That email oftentimes gets stuck in your spam filter, so check your spam filter if you don't see it. And if you have any trouble, call that toll-free phone number or use that live support tool right there beneath me here tonight on the video. Guys, as always, like I mentioned earlier, it's great to be here with you all. Hope you all had a great Father's Day out there. Happy Father's Day to all the dads as well. And boy, oh boy, always a pleasure to teach and trade with you guys every evening on this nightly newsletter. Now get out of here. Get some rest. You probably had a pretty busy day yesterday, so get some sleep. We'll see you guys tomorrow bright and early at 8 o'clock Eastern time in the trade room. If not, come back and see us again soon. I'll be back here tomorrow night with the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.